Hey everyone, today we're going to talk about a topic that is as crucial as it is complex, and that is what is a security in the cryptocurrency space? What exactly is a security? You can think of a security like an investment where you put money in today and you expect to earn more money in the future. For example, when you're buying stocks and bonds in a company, you're getting a security because you expect to earn profits as the company does well. It's important to note that securities are regulated by law to make sure that everyone is treated fairly and that investments are kept safe. These laws can be quite strict, so being classified as a security is significant. It's not always as straightforward as stocks and bonds, especially in the crypto space. For a crypto asset to be classified as a security, it needs to pass the Howey Test. I won't dive into the origins of the Howey Test, but essentially it's the OG framework used in the US until crypto entered the scene to determine if an investment is a security or not. It works by asking 4 questions. 1. Is there an investment of money? 2. Into a common enterprise. 3. With the expectations of earning profits. And 4. From the efforts of others. I think a good way to understand these concepts is to use an example. So let's apply the Howey test to Bitcoin. First, is there an investment of money? When you buy Bitcoin, well, most people, you create an account with an exchange like Binance or Coinbase, and you link your bank account. From there, you can buy Bitcoin at the current market price using your traditional fiat currency. So yes, the first test is passed. There is an investment of money. Second, is there a common enterprise? In Bitcoin's case, it is a decentralized network without any centralized authority controlling it. So in a traditional sense, no, there is no common enterprise with Bitcoin. Third, there must be an expectation of profit. Most people that I know buy Bitcoin because they think it's going to 5x or 10x in the next 5 years. So yes, there is an expectation of profit. However, I do want to note that as Bitcoin becomes less volatile, people might start using it as a medium of exchange for goods and services. You can look at El Salvador as an example. And finally, the fourth criteria, efforts of others. Profits from Bitcoin investments aren't generated from a third party or centralized authority. Instead, they are impacted by market forces and user participation in the network, kind of like gold. So no, Bitcoin investments are not generated primarily from the efforts of others. Therefore, according to the Howey test, Bitcoin would not be classified as a security. Even though there is an investment of money with the expectation of profit, there is no common enterprise and the profits are not primarily derived from the efforts of others. Bitcoin is an easy one. Let's apply the test to a more complex cryptocurrency, Ethereum.
Ether a commodity or a security?
And again, it depends on the facts and the law, and if there's a group of individuals.
I'm asking you about the facts and the law sitting in your seat and the judgment you are making.
And so, Mr. Chair, I think you would not want me to prejudge because I'm also.
But you have prejudged on this. You've taken 50 enforcement actions. We're finding out as we go, as you file suit, as people get Wells notices on what is a security in your view. There's a lack of clarity here in the marketplace. Can you at least agree to that?
I think that the clarity is there. The law is clear.
All right.
There's a group
of
individuals you're relying
let me be explicit about this. The market doesn't see it. Your regulatory actions and the CFTC's regulatory actions say that there's a great deal of uncertainty here.
As you can see from the video I just played, the chairman of the SEC, Gary Gensler, says the clarity is all there. Let's apply the test to Ethereum. The first part of the test. Is there an investment of money? Ethereum was initially funded through an ICO, which is an initial coin offering. This means that investors spent fiat currency or other cryptocurrency like Bitcoin to buy the Ether token. So yes, there is an investment of money. The second part of the test. Is there a common enterprise? Well, just like Bitcoin, Ethereum operates on a decentralized network. Therefore, there is no centralized authority controlling it. It's important to note, though, that at the initial stages of Ethereum, it was led by Vitalik Buterin and a centralized team of developers. This means that at the initial stages, there was a common enterprise. However, as Ethereum has grown and become decentralized, it is no longer a common enterprise. Third, is there an expectation of profit? Well, Just like Bitcoin, I know a lot of people who buy Ether with the hope of it 5 or 10xing in the next 5 years. However, Ethereum can also be used when interacting with smart contracts or decentralized apps to pay for transaction fees. Therefore, it has a utility outside of just the expectation of profit. It doesn't quite fully meet the expectations of profit requirements. And finally, fourth, the efforts of others. Again, Ethereum is a decentralized network and no single authority controls it or dictates where it goes. Therefore, it doesn't quite meet the requirements of efforts of others in a traditional sense. Due to its decentralized nature and the fact that there's no centralized authority to control it, Ethereum doesn't quite meet the Howey test. I think we can all see that there is a lack of clarity in defining what a security is in the cryptocurrency space, and this poses challenges. It makes it tough for investors to know what they're getting into and for developers to navigate regulations. This negatively affects adoption and progress. This is quite a complex issue, and either Congress needs to step in and create new legislation, or this needs to go to court and new case law needs to be created. I guess we'll see what happens. Cheers.